It is June 1st, 2022, and here's your Denver metro market real estate update for the month of May. Okay, so let's dig into the numbers a little bit. All these numbers are directly from the Denver Metro MLS. So Lakewood over to Aurora, down to Parker, and up through Thornton, North Glen area. Not too much of the mountains or north of there, south of there. So Denver Metro. And what we're seeing is in April, our average closed price, so the median closed price was 600,000. In May, dropped down a little bit to 591,000. So expect headlines to read about, prices dropping in the Denver metro area. But you can see it's really not that big of a deal because we've been so hyper the last few months. New listings. So this is the amount of new listings to hit the market in the month of May, which we're seeing 10,268. And every year, seasonally, we have the biggest inventory numbers in May and June. That's when most people list their house. And you can see this is very historical. The pattern repeats itself. I can go back much further and we can see the exact same trend. May to June has our highest months of inventory. So nothing too surprising or out of the ordinary there. Active listings. So this is the amount of listings that are currently active on the MLS no matter when they were listed. So if they were listed 2 months ago and they're still on the market, we're still considered that's active inventory. We can see we're sitting at 6,200 right now. Last month we were at 5,800. So once again, expect the headlines to say, the amount of inventory on the MLS is up 5%. But we are still at all-time lows. If we go back at this chart, all the way back to 2010, we can see back in 2010 we had 23,000 on the market, and we just keep going lower and lower, and we're at 6,200. So we're still at all-time record low of the amount of active listings on the MLS. Pending listings. This is the amount of listings that have gone under contracts, meaning they've got an offer on them, they're not closed yet, which we're sitting at 9,000 right now as opposed to last month at 8,000. Historically, that's pretty much in line. If we go back once again, this one's to 2009, we can just see a steady uptrend, and every time this time of year, May into June, we have the most amount of properties go under contract. Closed listings. This is how many properties have actually closed. So we went in April from 7,500 up to 7,800. No big deal, but this is how they're going to spin the headlines. They're going to look at last year's and they're going to be like, oh my God, we had 8,200 close in May and now we're at 7,800. So, yearly closings are down by 5%, 6%, whatever it is. But historically wise, if I pull this back, we're still just on trend. Nothing crazy is going on. Days in MLS. I think this number is skewed because it's not what we see out there. 4 is the amount of average days that they're recording as on the MLS. I take this one with a grain of salt, folks, because this statistic does not line up with everything else that we're seeing on there. It might be more like 10 to 15 days on average in the market, but this is what they're recording, so this is what I'm passing along. Month's supply of inventory. So a lot of people benchmark the amount of inventory based on how many months it'll take to sell all of those properties. Now, right now we're at 0.8, so that means 3 weeks worth of inventory. We were at 0.5, so 2 weeks worth of inventory on the market. Now we can look at historically, if we go back to 2010, these are all-time low numbers. A balanced, healthy market is typically between 3 to 6 months supply of homes on the market. And we haven't been there since, January of 2012. So once again, all-time record low inventory, all-time record high, almost record high prices. We dropped a little bit this month. Percentage of closed dollar to list dollar. So this is a percentage from 100 upwards and downwards. So if you listed your house at 100,000 and sold it at 100,000, you would be exactly at 100%. If you sold it for 101,000, you'd be at 101%. If you sold it for 99,000, you'd be at 99%. And we can see over the last few months, we had this big spike up that kind of tipped in April for almost 5% over asking on average. And we can see since then, we've dropped back down to 103.4%. So still astounding numbers if you price them rightly. I can't stress that enough. When we see the overpriced listings, they sit there, they have to accelerate price drops just to catch up. But on average, if you're listing at the right price, we're still seeing multiple offers for most homes. Now, we have a couple of other numbers on showings. I like these numbers a lot because it shows me how many buyers are out there in the market. So what we have here is two numbers, shows to pending and shows per listing. So what this is stating is how many showings it took to go under contract. And we can see in January of this year, we were up at 21 showings to get to under contract. And we've just been slowly going down. March was 17, April was 13, May was 9. 9 showings on average to go under contract. Shows per listing, similar numbers, just not as hyper. 8.6 showings per listing on average. So don't expect these crazy 30, 40, 50, 60 showings per listing because on average it doesn't happen. Now this is calculating in $2 million listings and $400,000 listings, right? So it just averages all across the board. But don't expect the crazy hyper numbers. And if we go back the maximum on this timeline back to 2011, we can see around that 5 to 10 mark is about average. So showings have dropped down a bit. Due interest rates have doubled in the last few months, and there's been a lot of buyer fatigue out there, people unsure with the stock market making an adjustment. So there's a little bit of uncertainty out there, but we're still seeing record low inventory and houses getting sold quickly when they're priced correctly. And there you have it, folks. That is our May Denver metro market real estate update for you. Now, the question on everybody's mind is what's happening with the market? Are we going to have a crash? Are we going into a recession? I don't know. Heck, the Fed doesn't know what they're going to do 30, 60 days before they do it. What we do know is interest rates have doubled over the last few months, which have affected the amount of buyers that are able to buy at certain price points. The good news is that there's always X amount of homes that are being sold in Denver every given day, no matter what the market environment. You just saw back in 2010, we had 25,000 homes on the market. We've got 7,000, 6,000 homes on the market right now. Until those inventory numbers go up, I don't see what's going to change this market. Construction costs are through the roof, so new homes aren't being built at a record pace. Interest rates are higher, which is slowing down the buyer pool, but there's still only X amount of houses that are coming on the market every month, and they're all getting bought nearly every single month as long as they're priced correctly. So we'll keep track of it. I'll keep you posted as we go along, let you know when we start seeing any changes in the market. If you have any questions, feel free, reach out, shoot me a message, send me a text message. I'm happy to chat with you any given time. And until then, folks, happy housing.